Hey traders, Mike Sir here. Did you know that some of the richest people in the world pay very little to no tax on their fortune? That somehow they're getting away with some tax loophole or have their money stashed away in some secret location, undetectable by the tax authorities? Well, you're not wrong. In fact, even though billionaires like Amazon founder Jeff Bezos increased his net worth $75 billion during the past year, while Tesla CEO Elon Musk added $150 billion, they both paid very little income tax compared to their massive wealth. Now, this is according to ProPublica's reporting on leaked U.S. Internal Revenue Service documents. So how is this possible? Well, in today's video, I'm going to show you a few ways on how they legally did it and how you can implement some of their strategies to minimize your tax bill every single year, so you can use the tax savings to build your net worth. Please keep in mind that I'm not a tax accountant, and you should contact a qualified professional before making any tax or financial decisions. So with that disclaimer out of the way, let's get started. Did you know that income from asset appreciation and income from employment are taxed differently in the US? Now, most working Americans obtain their income from hourly wages or a monthly salary, and their income taxes are automatically deducted based on their income level. While in the US, the highest federal income tax rate is 37% for individual taxpayers making over $523,000 or more. And if you include US income state taxes in states such as New York, then you add another 10% and you could be paying well over 50% of your income to the government. But the wealthy typically accumulate their income from assets that appreciate in value, such as their stock market holdings, real estate, or other investments. Now, the income that they generate from these assets are only subject to taxes when they actually sell the asset. Now, since the rich don't get taxed immediately on any of their wealth appreciating assets, they're able to grow their wealth much quicker. So what the rich try to do is avoid getting paid a monthly salary. So for example, Jeff Bezos collected just $80,000 per year in salary, while Elon had no base salary at all. But what they get paid is in company stock or stock options. Now, for example, Elon's stock options in 2020 alone were worth over $22 billion, and his total Tesla stake was worth over $170 billion, especially if you include both his stock and stock options. Sometimes company executives would sell off their shares to live off of or diversify their assets, and the taxes that they pay are referred to as capital gains. Now, the taxes of these gains are typically lower than income taxes generated by employment, thus benefiting those who generate income through asset appreciation. However, there are people like Elon who has rarely sold any shares during his time with the company, so how does he have the money to pay for his monthly expenses? Well, let me tell you next. For the wealthy, instead of selling their stocks, real estate, or other investments to fund their daily lifestyle, which would cause their assets to be subject to tax, they instead borrow money and use that to fund their lifestyles. So what they do is they go to their bank and either get a loan or a line of credit using their stock market or real estate portfolio as collateral. So for example, it was reported that Elon got a loan for $550 million by offering his Tesla shares as a guarantee for the loan. Now, Elon never got taxed on the loan because borrowed money doesn't count as income. But you might be thinking, well, isn't he going to have to pay a lot of interest on the loan? Well, apparently not, because banks are very willing to offer wealthy people huge loans at extremely low interest rates, mainly because of the millions or billions of dollars in assets that they own, and they consider these loans as extremely low risk. Also, even if the rich incur a lot of interest for their loans, the interest can be written off as an expense, and this is used to offset any income that they generate. So this is how the rich can fund their luxurious lifestyles and really enjoy the benefits of their income without having to pay taxes on it. Before I talk about the next way that the rich avoid paying taxes, please take a moment to like this video. I would really appreciate your support. Okay, let me share with you how the rich utilize their resources to hire the best tax professionals who are devoted to keeping their taxes low and their wealth growing. They do the heavy lifting of finding legal loopholes during the tax filing process. to legally save their clients as much money as possible. So for example, it could be claiming non-residency in the US and living in an income tax-free country, or it could be getting certain tax write-offs through charitable donations or simply setting up tax shelters. Now, there's a lot of legal ways to reduce your taxes, especially if you qualify for them. In addition, tax lawyers are well prepared for the off chance that their wealthy clients are audited by the IRS, which is such an infrequent practice, and it's mainly due to the number of years of repeated budget cuts, and it's really caused the IRS to rarely have the staff or the resources to undertake any expensive, labor-intensive auditing process. You often see the rich travel in business class, eat at the finest restaurants, or drive luxury cars. But did you know that while they're enjoying these luxuries, these expenses actually helps them save on taxes? If you're already a small business owner, you may already be aware that there are certain business expenses that you can deduct from your taxable income when you run your business. Now, these expenses can include travel, entertainment, cars, and business use of home expenses. But as a salaried employee, you won't be able to write off any expenses that could reduce your income, but for the rich, they can justify these business expenses to meet potential clients or simply the way that they run their businesses. Tax havens are places where wealthy individuals keep money in offshore accounts for tax avoidance and other purposes. Now, you might think of countries like Switzerland or small low-tax jurisdictions in remote locations like the Caribbean islands. But did you know that a handful of other US states are also favorite places for tax shelters? Well, first of all, there are 7 states in the US that I want to let you know that have no state income tax. And they are Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. So it wouldn't be surprised for the rich to live in these states, especially if your income tax is high. In addition, take South Dakota as another US tax-preferred state. In addition to them having no state income taxes, it has no capital gains taxes, no dividend or interest taxes, and no state inheritance or estate taxes. Now, this means that assets held in a South Dakota trust are taxed under South Dakota tax law and not subject to any taxes. And this is one of the reasons why the US state South Dakota alone now houses $360 billion in tax shelters, an attractive tax haven for the wealthy. Thanks for watching. If you like this video and want to watch other videos where I show you all the tools that I use on a daily basis to analyze the financial markets, please click on the left for more videos and click on the right for the full playlist. I'll see you in the next video.